Budget 2010 brought to you by Harith Fund Managers.
Well, there's been a lot to digest today on the budget front, but at the end of the day, nothing really too dramatic that's come onto the table regarding policy, regarding mandates. Some were expecting fireworks, but before we unpack the numbers, let's get into your thoughts. James, let's start off with you.
Yeah, I think the potential for an upset was there, and I think the country as a whole sighed a big collective sigh of relief that this is pretty much business as normal, to the extent that we even had similar jokes to last year. Very much a continuation of the sort of sound fiscal policies that were implemented by Mr. Manuel.
Brigid.
I think that what we were really worrying about was the risks to mandate change, and that was specifically get around the potential pegging of the rand. That obviously was subsided by comments around the fact that they're quite comfortable with the mandates at the South African Reserve Bank, keeping inflation targeting as it currently is. And I think that those kind of signals were very positive, specifically to offshore investors. And any comments that we got from our offshore investors were, as Jeff said, a very big sigh of relief that we're not changing mandates and that policy going forward will be as business as usual. A
little bit of disappointment though, a few things not really elaborated on, like exchange controls, for example. Annabel, what did you think of the speech?
I thought it was a good, well-balanced budget. I think that he certainly steered a very steady ship in these uncertain times. I think, for an economy which has newly emerged from recession, we wouldn't have wanted any surprises or any upset. So that was very good news for South Africa. If you have a look at the actual expenditure, though, for this year, 907 billion, that's a huge figure, a very hefty amount. And, coming in about 34% of GDP, it is a bit worrying. So too the deficit as well, around about 7%, expected to fall down to 4% over the next few years. It is obviously concerning as well. And I think, the key point was the recognition was given to these high figures, and also recognition as well that even though it was obliquely, now is not the time to make any policy changes, whether it's to do with trying to influence the level of the currency or whether it's trying to influence any other one of the key areas that government is in charge of. So I think from that point of view, the recognition that we need to move back to low fiscal deficit figure, and particularly the analysis on the structural deficit, was very cheering. I think it was a good budget.
Ernie.
I didn't expect any major changes. He was good to his word in terms of the medium-term budget speech. Pretty much steady as she goes, as we've seen in the past. Some concerning aspects of the budget for me, but all pretty much business as usual. A couple of new things, things like the carbon tax, gambling tax. That's quite a novel thing, the tax on gamblers. I just question whether if the commissioner is, or if the minister and the commissioner is thinking of taxing gambling profits, are they going to allow gambling losses? Because I would think that there are more losses than profits with gamblers at large.
Right, let's look at the way the markets responded. Brigid, looking at that rand, the rand looking strong despite the fact that we saw gains coming through on the dollar today.
Look, after the budget, we had two figures that came out today. Obviously, it was the budget, which was well received into the market, and subsequent to that, we saw rand trading relatively stronger levels. On top of which, we had retail sales, which came in this morning a little bit better than expected. So just slowly showing us that there is that growth projection. Although those figures lag, we are looking at potential for growth. And I think as an overall look at South Africa, it just gave that positive sentiment which you saw come through in the currency today.
We have seen a risk coming off the table, Annabel. The rand currently trading at 760 to the dollar, so we have seen a relatively stable rand today, but we've been seeing massive moves on the euro dollar. Despite the fact that we've seen massive volatility in other currencies, the rand has been relatively stable over the last couple of months.
Well, I suppose over the last couple of months, maybe not that stable, but certainly over the last few days it's been more stable. And I think, today it really did seem to take great relief from the fact that, despite all the noise that we've seen relentlessly about trying to intervene in the level of the rand, it was a very, very clear statement from government today that the rand must be left alone to find its own level of competitiveness. And indeed, there is no silver bullet solution to competitiveness, both for South Africa and, of course, for its products, its exports.
James, were you hoping to see some news on the rand and to stabilise the rand? It has been obviously one of the hotly debated issues here in South Africa. At the end of the day, intervention not really a good strategy to embark on.
Absolutely not. It's a recipe for writing out checks. And certainly the approach to date about trying to smooth it by accumulating reserves when you have strong inflows is not a bad one. And I think the Reserve Bank has been pretty active in that. But if one looks at the budget as a whole, I think by this time tomorrow it's going to be yesterday's news, in that there are far bigger issues at play, and the movements on the rand are going to be more driven by what's happening in the international markets rather than what's happening on a domestic front.
Looking at the way the bond market responded as well, Brigid, because we saw aggressive moves there.
Interesting day today, specifically around new bonds that are going to be issued into the market. You're looking at much longer dated bonds into 30 years, which is opportunistic for your pension funds, etc. I think very prudent, and there was an announcement over the National Treasury website to say there's going to be another 2 inflation-linked bonds as well. So I think that that's given some relief, because we really do need to see more paper in the longer end of the curve.
The markets, Ernie, just looking at the way they responded, relatively muted at this stage, but looking at it from a tax perspective, especially on the corporate front, what were your thoughts?
No major changes in the corporate front. There was no announcement on when the new dividend tax regime would be implemented, which was a little bit of a disappointment. But I understand that there's expectation that the revenue take on the new dividend tax will be less than the current STC regime. So, in the current economic climate, it's probably not a big rush to implement it. From the tax point of view, a couple of new changes. You can see that the Minister of Finance is the ex-commissioner of SARS, because there's quite a few tax avoidance measures which have been specifically identified for attention. So, in terms of revenue collection, we expected increased debt, reduced state spending, increased tax collection efficiency, and the message is watch out. The tax man is looking at your affairs much more closely.
Okay, we'll unpack that in just a little while. Annabel, looking at the budget deficit, which is expected to hit around 7.3% for this year, you had a slightly more bearish outlook for 2009-2010, purely because your GDP figure differed somewhat.
Well, I think, the consensus actually was closer to 8%, generally, and we were certainly close to 8% as well. From looking at today's figure, there does seem to be more optimism about revenue collection that we had factored in. So that certainly is one key area. And indeed, they're certainly not cutting back on expenditure significantly, but perhaps there are some gains to be made in that area. In terms of actually a percentage of GDP, well, I think what's also quite key as well is that they're cutting back on capital expenditure. The estimation was for around 872 billion, they're now looking at 846 billion. So it almost looks as if some of the gains that are being made in terms of savings, in terms of revenue, are coming at the expense of capital expenditure instead, and you are seeing this expansion still of social grants and social welfare. Perhaps it's appropriate in the current environment now, but social welfare and continuously widening the social net is difficult for government fiscus to sustain indefinitely. So from that point of view, we would prefer to rather see a shift towards growth in the South African economy and employment creation to make it more sustainable longer term.
Brigid, you were talking about the loans. Obviously, South Africa has to look to the international market to try and fund our deficit and, of course, our budget as well. In terms of servicing this debt, could it reach to about 4% of GDP going forward? Because that's the number that's been thrown around.
Look, I think we're going to have to see that as it plays itself out. In terms of offshore debt, I think there will be a good uptake for our debt locally. Where they're looking for 2 billion now, 2 billion the following year, and then 3 billion thereafter, which I think is quite significant, and I think that there is appetite for that paper. So it potentially is a good plan in order to try to accumulate some form of funding.
James, are you also quite confident there'll be great appetite? I mean, we saw it previously with the bonds that we have put out there, oversubscribed. Do you think it's going to be a trend that's going to continue?
Yeah, SA has never had a problem getting its paper away, particularly because it's very positive yielding. And from that context, the currency is also backed by a strong mineral backing as such, in terms of a large proportion of our exports are minerals. And that does give the currency an underlying strength. So you've got a very strong yield play there, and especially given the current low yields on an international basis, anyone looking for a significant carry trade is going to be buying rands and buying SA bonds.